ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
Hello. What's going on? Let's see. Got my little thing there. Hello. Okay. Is there a session tomorrow? I don't see why there wouldn't be. I can't worship the Dark Lord Satan 7 days a week and then ignore the one day of the year where everybody else takes a break. So yeah, we will probably have a show. I would say I'm sure we can talk Brandon into waking up. Oh, I don't remember what this flavor is, but it's got a vanilla essence. And I like it. I like it a lot. All right. So for those of you digital investors, you know that we've been doing a lot of option stuff lately. So today for our educational portion of office hours, we're going to focus on how to roll over contracts. A lot of times, maybe you think you were right, or you don't want to get put, or you don't want to get called out, and you want to buy some time. And in extremely volatile assets, buying time is awesome because it works real good. And you can buy some time. And so you can roll over your contracts. So I'm not going to explain it right now, but I will explain it on the back half of today. After we get through the news, that's what we're going to focus on. We're just going to focus on the actual skill set of rolling over contracts. Like for instance, I'm rolling over one. It's not in the money. It will expire worthless. But for the sake of today's kind of show, I had one, and it was on the verge of clearing. And then it looks like it may or may not go for what I wanted, but I'll explain all that. It's still going to be it'll still be a nice little windfall, but we'll see. So we'll get into that. We'll get into the methodology and all that kind of stuff of rolling options contracts. And you don't just have to roll into the same contract. A lot of people kind of get that wrong. They think, oh, I don't want to roll into this one. I want to roll. You can roll into different contracts. So we'll get through all that. So that'll be kind of cool. Okay, but not just yet. Let me see. We got some more good mornings, sis. Good mornings, good mornings, good morning, sis. Good morning, sis. Good morning, sis. Good morning, good morning, good morning. Jesus loves you. He may, or he may not. What's not to love, man? All right. So many of you, some of you may have heard about this absolute dumpster fire show launch of a token. So Base launched a meme coin, and you want surprise, surprise, before the coin launched, before it was even announced, 3 wallets had already gathered up a bunch of tokens. I wonder how this turns out. It's hard to say. Maybe everyone made money, or maybe there was a 90% crash and 3 people profited and everybody else got destroyed. Who could say? Who could say, really? You guys want to vote on it? Do you want to vote if the Base meme coin launch either did or didn't go well? Anyone want to take a shot at that? So Coinbase, Coinbase has backed Base. Now, to keep this clear, Coinbase didn't launch this. This is not a Coinbase meme coin. This is a Base, like Base. Those dudes, Base. They launched a meme coin as an experiment, and their idea was, we want to bring cultural content on chain. Okay, but I mean, isn't cultural content like already on the internet? And do we need it on chain? Does it need to be etched into perpetuity by the blockchain or by some blockchain? I don't know, man. I don't know. Anyway, let's see. The token lost 90% of its value within a few minutes. And there were a few people that made money, and it was people that bought the token before it was publicly announced, which seems a little sketchy. The community criticized the lack of transparency, obvious, especially due to token concentration in 3 wallets and suspicions/allegations of insider activity. Well, I mean, it's beyond suspicion. It's not suspicion once the insider trading has already occurred, is it? Despite criticism, Base defends the initiative as a creative attempt to promote digital culture and Web3, not as an official investment vehicle. Says the dudes that made money. What began as a playful experiment by Base, the blockchain network powered by Coinbase, ended in a whirlwind of criticism and mistrust and some insider trading. On April 16th, Base posted an image on X with the phrase, "Base for everyone," which is a little, let's face it, that's a little stupid. That's like, it's so cringe and it's like, oh God, man. You guys are, maybe it's the same marketing team that works on, what's the very worst marketed project? It's hard to say if it's Dot, if it's Cardano. I don't know. It's tough. It's definitely some spammy layer 1. Anyway, this is worse than that. Accompanied by a link to a token bearing the same name. They called it Base. They called it Base, man. Base. Gosh dang. What up, Dave? Anyway, the initiative, hosted on the Zora platform, never heard of it, it was aimed to explore how digital content and memes can live permanently on the blockchain. Okay. I don't know if that's cool, but whatever. At launch, the token reached a market value of 17.1 million in just over an hour. However, within the next 20 minutes, it plummeted nearly 90%, dropping to around 623,000. Data from Look On Chain revealed that 3 wallets controlled nearly half of the total token supply, raising suspicions about possibly unethical early access. No, not suspicions. Not suspicions. It is. That is what happened. Let me see if I can. Oh, it's so good. I want you guys to see this post because the post is pretty clear. Okay, let me post that here so we can take a look. All right, peeps. Let me go here. Oh, no, it blocks some of the bottom. Let me get rid of that banner. Okay, so here's what we're looking at. 3 wallets bought a large amount of Base for everyone before Base had even posted and sold them, meaning you could not possibly compete with these guys. One wallet spent $2,370, 1.5 ETH. They bought 256.39 million bases for everyone tokens. Sold for 108 ETH, so they pocketed 170,000. Well, no, 170,400, making a cool 168K profit. Remember, bases for everyone. The next wallet spent one ETH. They booked $266,000 profit. Remember, bases for everyone, except it's really for these three wallets. And I feel like it's probably the same person, because the third wallet spent 1 ETH to buy 131 million tokens, and they booked a profit of a cool $231.8 thousand. Base for everyone, though, right? Base for everyone. Woo! Woo woo! So my sketch meter goes up when I hear some crap like that. Anyway, yeah, basis for everyone, I guess. The goal was cultural, they said. So everybody came out. No, listen, we wanted a cultural project. And this is not about money, really. So the three dudes that sold, the dude that sold, that's not about money, but it's just about. If it's not about money, why didn't you airdrop the token? Doesn't make no sense. Don't make no damn sense. Do it. If it's cultural and it's not about money, why did you charge money? Huh. Base issued the statement saying this was not an investment product and it's not directly affiliated with Coinbase. I'll bet you the red phone started ringing and the dudes from Coinbase, maybe even Brian Armstrong, said, "You mother effers better get our effing name off of this stupid effing F bomb thing." There was a lot of F bombs dropped. You best believe. Anyway, in response to the controversy, Base issued a statement clarifying that the token was not created as an investment product and is not directly affiliated with Coinbase. According to the team, it was a public test designed to encourage decentralized cultural creation and explore how tokens can permanently represent digital content. They also emphasized that they would not sell the tokens for profit or profit from them. And yet they did sell the tokens for profit, and somebody profited. Weird that their statement came after the profit had been taken. Did they say maybe they won't sell more? Maybe they won't keep selling. Maybe. Anyway, they had a little post. Base posted. Base is posting on Zora because we believe everyone should bring their content on chain and use these tools to make it possible. Memes, moments, culture. I would like to slap the raw ripple out of these dudes. Anyway, so this part's weird. Here's their little caveat at the end. Base in their post. To be clear, this is their words on their post. Base will never sell the tokens, but they did sell the tokens. That's how there was a token launch. That's how a launch works. They sold them. They didn't airdrop them. They didn't give them away for free. So I don't know how you say it's like Ted Bundy's like, I will never murder. Buddy, you got there's 13 women's heads on sticks over there. I will never murder. Bro, 13 heads. Never. Okay. All right. And then his mom, not my Teddy, right? Anyway, to be clear, Base will never sell these tokens. These words. And these are not official network tokens for Base, Coinbase, or any other related project. Yeah, except that Base promoted these, and it's called Base. They called it Base. They didn't call it Culture Coin. They called it Base, on Base, promoted by Base. And they sold them and then said they would never sell them and that it's not official. Well, what the smoke? Anyway, the content we share is creative, and we're going to keep bringing culture on chain. Shut the Base up. Anyway, Base's visions aligns with an emerging trend in Web3, which is transforming the blockchain into a kind of open digital museum. Okay, I mean, I think we covered this with the NFT craze of 2021 and 2022, but okay, let's call it something new, where memes, artwork, and cultural movements can live beyond the limitations of traditional social networks. However, the execution leaves much to be desired. The risks of public experimentation. See, now it's an experiment. See, when Base effed it, when they est the bed, when they rippled the bed, now it was an experiment. This is an experiment for no money, even though they made money. And they won't sell, even though wallets already did sell. And they did sell the token originally, the thing that they said they wouldn't sell, but they already sold it. So anyway, the way the launch was handled felt rushed. It was disorganized. Two addresses bought 21% of the supply before the initial surge, then sold for an estimated profit of about 300 racks each. This fueled criticism about insider privileges and unfair practices, which is accurate. That's what that is. If someone buys before something is for sale, they got the hookup. You can call it what you want. That's a scam. That is a straight up scam. So Base, not Coinbase, but Base just perpetrated a scam with a coin called Base, and then said that they neither sold it, which they did already, nor profited, which they did already, nor was it official, even though they promoted it, and it's called Base. The effing thing is called Base. Come on, bro. God dang. Like, anyway, they had a second token launch shortly afterwards, and that also failed, further reinforcing the perception of improvisation on the team's part. Despite the stumble, the crypto ecosystem will continue to experiment and innovate, but it probably won't be on Base. It certainly won't be official, and it probably won't be successful. Good job, Base, with your unofficial Base token called Base, promoted by Base. What a bunch of dicks. Anyway, yep, fail. See? Everyone can have a bad day. Some people just stack them together. They just keep stacking them. Okay. Before we get to our education, we got to talk about Ethereum. Oh, by the way, did anybody hear Russia is looking at launching a stablecoin? Huh? So a digital ruble? We'll see. Digital rupee? Digital деньги? That's Russian for money. Деньги. I don't know. We'll see. Would that make much of a difference? Well, if they start digitizing, you don't stop digitizing. That's the main takeaway. Once you start digitizing stuff, everything looks that once you have a digital hammer, everything looks like a legacy nail. You just want to hammer it into digital. So that's a good thing. And it probably bodes well for Bitcoin and to an extent Ethereum moving out into perpetuity, but we'll see. I can tell you where it won't be. It won't be running across Ripple rails. It won't be on the XRP ledger, and it won't be based on Cardano, and it won't be based on Polkadot. Now, will it? No. Vitalik Buterin, he Russian. My guess is it would run across Ethereum. We'll see. Be interesting. I don't know. You know what? That's the one thing. When I looked, I don't know if they had details on that. Let me take a look. Because I was just perusing said article. Let's see. USDT wallets linked to Russia were blocked. Officials are now considering their own homegrown stablecoin. They would be. So basically, a senior official from Russia's finance ministry, unpronounceable name, has suggested that the country may need to create its own stablecoins. These would be pegged to other currencies. These would help meet growing demand and reduce reliance on foreign stablecoins like USDT. USDT is getting found out. It turns out that a token created by crooks, scam, and counterfeiters who all got in trouble for being crooks and scams and counterfeiters. That's fine. They did their thing. Listen, crime is a job too. It's a profession. Just be good at it. But once you get busted, don't start going to every government saying, hey, we'll hook you up, bro. We'll freeze transaction. But you're no longer cryptocurrency. You're just a ledger. And you're not even a permanent ledger. Tether freezes transactions all the time. So anyway, Russia also, as well as Europe, has moved away from USDT. I don't know why Americans still love this crap. Anyway, It looks like before the USDT blockage, the stablecoin was widely used by Russian firms as a payment tool, particularly for cross-border transactions. Its popularity stemmed from its ability to maintain a relatively stable value, making it an attractive alternative to the high volatility of the Russian ruble. However, following Western sanctions and the blockage of digital wallets using USDT and linked to USDT, this is why Russia is now exploring other alternatives. They said that Russia should develop its own stablecoins pegged to other currencies after Russian-linked wallets holding USDT were blocked. And this is from a finance minister. This isn't just some rube on the street. So yeah, Craig, I try to get as much rant per square foot. I want to get a lot of rant per square foot, buddy. Anyway, Russia's decision aligns with a global trend where countries are considering or already developing their own CBDCs. China has been actively testing the digital yuan, renminbi. Yeah, that's a tricky one. They're aiming to provide government-backed stablecoins to popular cryptocurrencies. Similarly, the EU has been exploring the digital euro. Bitwise revealed that stablecoins are gaining serious momentum in the crypto world. The total assets under management for stablecoins hit a new all-time high of $218 billion. This means a 13.5% increase from the previous quarter. You want to guess where most of that came from? Surprise, surprise. Tether, printing money out of thin air. Whoa. I'm sure that should blow everyone's mind here. Stablecoins are at $218 billion. Tokenized real-world assets, which is a stupid term for something that's been around since the beginning of crypto, 19 billion, which is not really very much. BTC futures trading, 800 billion. Okay, so like put it in perspective. BTC futures open interest, 16 billion. BTC held by public companies, 688,000 Bitcoin. Yeah, so that's kind of cool. On top of that, transaction volumes also surged by 30.14%, showing growing demand and adoption of stable assets. The spike signals that more investors and businesses are relying on stablecoins for everything from trading to cross-border payments. Yeah, it'll be interesting to see all this tariff hopping and how people kind of get around all this kind of stuff, like moving stuff to other countries and then shipping it out of there. You know, there's all sorts of scammy little tricks. It'll be interesting to see how that goes. But anyway, that's that. I thought that was kind of interesting on the digital rupee. No, digital ruble. The rupee is Indian. Ruble, Russian. Деньги, это деньги. Okay. Let's see. Manfred, I'm thinking about selling a lot of my ETH for node factories with zero rep based. Wait, I don't know what the last. With zero reputation. Wait, are you saying selling a lot of your Ethereum or selling a lot of Ethereum node factories? I'm confused. I think what you're saying is, and that's a question for, we would get into that behind the wall, the game theory of that, Manfred. But yes, listen, you can do whatever you want. It's your stuff, right? Bro, do whatever. Do what you want with your things. Don't let anyone tell you what to do with your thing. It's your thing. You can do with it your thing as you want, as long as it doesn't break the law or some kind of, don't do it near a school zone or near a playground. All right. Let's go and let's talk about Ethereum fees plummeting, crashing to a 5-year low. Crashing. I like how they say that. Crashing. Why would it? Ethereum fees don't crash. Fees going lower is a good thing. I like these guys, man. They write some stuff. Ethereum fees crash. No, Ethereum fees come down, and we can use Ethereum again. Make Ethereum great. Mega. Make Ethereum great again, and mega's even a word. What? Anyway, I'd wear that hat, but we can't make it red because we get our asses kicked. Anyway, although at least now we have more than 51% of the crowd would jump in on our side. And then if you back out all the theys, all the the big the big gender discontent female PE teachers, that only leaves about 6 people that would attack you. I think you're fine. I think we're fine, actually. Yeah, mega. Okay. Ethereum's transaction fees have plunged to their lowest level in a half decade, signaling a lull in network activity. We talked a little bit about this yesterday, but creating ideal conditions for builders and early adopters. What? Ethereum, the world's second largest cryptocurrency by market cap, has reached a surprising and historic milestone, with its transaction fees descending to their lowest level in 5 years. See, he put crashing, but I don't think that word, this is not a crash. This is a freaking great. It's a benefit. It's a win for us. Man, I remember paying hundreds of dollars per transaction for Ethereum transactions during the NFT stuff. Hundreds. You just factored in, it's going to be $150. Every NFT is going to be $150 more. Like every time. It was ridiculous. Anyway, right now it's at a 5-year low of 0.168 pennies. So $0.168, 16, almost 17 cents a transaction. The dramatic drop in fees reported by blockchain analytics firm Santiment has largely been driven by a slump in network activity. Yes, less people using, less congestion. Some of it is technological upgrade, but most of it is just fewer users. And if fewer users are interacting with the Ethereum network, particularly with the DeFi stuff, which that's a big part of it. There's a lot less DeFi crap and a lot less NFT garbage going around. Why? Because they're doing all that stupid gambling mumbo jumbo over on Solana with meme coins, with a bunch of idiots that don't know what they're doing, which is cool. But anyway, just a general decrease in the DeFi, NFT, and smart contract activity. So the downturn resulted in less congestion, which consequently lower competition for block space. Lower competition for block space leads to lower gas fees. Does that make sense? Someone had asked yesterday, and we talked through it. We kind of talked through it. They're like, "Whoa, because Ethereum fees are low, does that mean Ethereum's never coming back?" No, that's a lot of you made a lot of too many assumptions. Too many. Don't make so many. Anyway, but essentially, lower activity means less congestion and less competition for block space, which leads to lower gas fees. Okay. Now, that doesn't change the inflation rate. That doesn't change the burn. The burn rate is based on total activity. So total activity gets to a point, and then the burn outweighs the inflation. More burn than inflation, less tokens. More inflation than burn, more tokens. There you go. Okay, so Manfred, he recalibrated the statement. I'm thinking about selling 80% of your Ethereum. You mean of your ETH? 80% of your ETH to buy node licenses? I'm not going to give you advice, Manny. I'm just going to say, don't do that. I'm not giving advice. I'm just saying, don't do it. Okay, maybe I am giving advice. Don't do that, man. Don't. You're confusing those two things. Those are two different animals. Okay? Node licenses, that's about buying into the business of participating in AI compute to receive passive or recurring income, which at least right now is not happening. Now, there's some passive income generated by the tokens that you're getting. That's fine, but you're not creating USDC reserves right now. You're not getting paid USDC monies. Okay? So that's a business proposition. Okay? There. Now, you can do whatever you want. I wouldn't do that because that's confusing two things. I'm assuming that you bought Ethereum for other reasons, speculative or otherwise. If you bought Ethereum in order to buy node licenses, great. That's just a transactional chain. You're moving down the flow chart. But if you bought Ethereum for the appreciation of Ethereum, or you're at a rage quit of Ethereum type scenario, I mean, you got to do whatever you want. But to me, that doesn't seem like a great move. To me, just one guy talking here. Just one guy talking. Okay, let's see. You sold all of your Ethereum for ADA. Worth. Wait, what did the worth? I understood it, Quips, until you said the last bit. You sold Ethereum for Cardano. Oh, man. Woo. This is just people got some ideas today, huh? Woo. Anyway, you know what? You can do whatever you want. It's your stuff. It's your cash. Do what you will. Anyway, Santiment's marketing director Brian Quinville explained that the change in detail in economic terms, it basically allows you to create some insight. So their thinking is this could set up a transition where it's kind of like safe to build, safe to run on Ethereum again. Mega, make Ethereum great again, right? So while it appears bearish if you just look at the story really close. If you step out a bit, it's not quite as simple because periods of low fees and disinterest in Ethereum have usually been followed by pretty sharp price rebounds. Demo. I've not seen what Demo is, Hude. Demo. It's a car. Is it a car type token, like a car rental token or some kind of thing like that? Anyway, Santiment noted that when the crowd leans away from an asset with thriving development such as Ethereum, remember there's still a lot of people that build on Ethereum, it raises the likelihood of a surprise price surge. For developers and early adopters, now might be an ideal time to build and test applications on the network because you have very minimal costs, positioning themselves ahead of what could be Ethereum's next breakout. So you would ask yourself, can low fees spur a price rebound amidst economic uncertainty, this kind of weird cloak of uncertainty that we live in? So despite the low fees, Ethereum has struggled, obviously, to regain its it sat 3 months ago, we were in 3,000. We were 3,000 to 4,000 range. And now here we are, like almost a third of that. God, what a dick punch. Anyway, over the past month, Ethereum's declined by more than 15%, is currently trading just below 1,600, below or at, right around. Okay, so the 14-day loss exceeds 12%. The price remains highly sensitive to macro factors. Let me see if I can give you guys this chart so that as we talk about it, there we go. Let me see. That one goes there. That one goes there. Okay. So here, let me make this bigger. Okay. Let me take off this banner. Great. Now we can talk about this with some context. We can all suffer together. The price remains highly sensitive to macro factors, including inflation, trade policy, which includes all this tariff tantrums and all this kind of crap, which again, I think is just negotiating fuel, but whatever. A wave of economic uncertainty. There's the word. That's the word of the year. The word of 2025, uncertainty. What do you see in the markets? I see uncertainty. Bitch, markets are always uncertain. Otherwise, one person would have all of the goddamn money. It's always uncertain. What a stupid excuse, because that's the excuse now people give for sitting on their hands. Hey, pal, why aren't you acting? Uncertainty. Well, what about it's uncertain. Are you guys hiring? No, we're uncertain. Are you guys firing? Well, we're uncertain. No one's ever certain. That's why they call it speculation, you stupid morons. Man, I was about to cuss right then, but I didn't. Now, luckily, I have the words I can go to, which is Ripple. I can say Ripple. I can say Cardano. I can say Dot, Polka Dot, because that's almost a curse word, except that nobody there stole anything. Base, we can use base as a curse word. Base the bed. Ooh, base the bed. Although ripple the bed, I think ripple the bed is better. I think it, anyway. So a wave of this economic disquietude. Ooh, turmoil and brawl. That's where I'm going to go with it. We're not using uncertainty anymore. We're going to use other words. A wave of economic turmoil followed the announcement of new U.S. tariffs by President Trump earlier this month. While some countries received temporary exemptions, risk sentiment across global markets remained fragile, hindering a strong recovery for major crypto assets, especially Ethereum, which is still bent over because it got kicked in the nuts so hard. According to Santiment, traders are holding back, waiting for clear signs from both the economy and Ethereum. But if you're one of the people that holds back and waits for everyone else to push the asset, then you don't benefit from the asset. You're just chasing the thing that's already happened. Like, that's why there is speculation. But for those of you that want to see this visually, this is what it looks like visually. We got extreme fear. Right here, we got extreme fear. And then we got a big run up. And then we got here some extreme fear. Then we got to run up. Then we got some extreme fear. Then we got to run up. Huh. But this hasn't happened yet. We're just trying to think. Will this happen? And we're in a period of extreme fear. So, I mean, these things are circular, man. These things move in cycles. I think that's pretty obvious. But yeah. So what happens? Do we think that this thing's about to move? Well, Ethereum faces, again, these are technical resistance levels, which is all bull crap. It makes no difference because it doesn't factor in the whole rest of the world. It just factors in lines in the sand. But these douchebags are contending that over $1,650 pushes it well above 17, and under 16 pushes it to 1,500. Oh, so the technical analysts, these geniuses, they've decided that if it goes up, it's going to go up, but if it goes down, it will be lower. Dude, these guys, I don't even know why these guys publish on Twitter. They should just take their millions and millions and trillions of currency units that they earn every day for all these genius bets and just retire. Like, what's the point when you got all the knowledge? So what happens now? You have the Pectra upgrade, and then some other upgrades following for Ethereum. So Pectra is finally scheduled to hit the Ethereum mainnet on May 7th. This is a pretty significant update because it rolls out in two phases, each with the potential to drastically improve the current Ethereum performance. It would improve the fee structure, and it would improve scalability, which would reduce uncertainty and disquietude. These back-to-back infrastructure improvements paint a completely different picture than the bearish sentiment that seems to currently be dominating. I also think, I don't know, man, some of this, it's not manipulated, but I do think there's some coordinated selling and there is probably some shenaniganery. I mean, I don't know. I hate to go down that path, but because that's like victimhood. That's like, oh, poor. But some of the behavior, like when Bitcoin's down 1% and Ethereum's down 10%, and Bitcoin's up 1% and Ethereum's up 1%. You're like, wait, what? I thought something seems a little weird. Doesn't say weird. Could be a technical glitch. Hard to say. Something seems weird. Anyway, back-to-back infrastructure improvements is a good thing. Pectra is a good thing. May 7th, I guess, is what we're looking for. If history is any guide, Ethereum tends to rebound sharply when developer activity is high and fees are low. If history is a guide. So we have developer activity at a near-term high. We have upgrades coming. We have Pectra just a few weeks away. We have Ethereum fees at a low, a 5-year low. So here we go. So me reading this information would be less inclined to want to dump my Ethereum. Less inclined. But, man, you got to do you. Yeah. So there we go. Let's see. A flock of black swan events overhead with certainty. That's right. Yes, there's no uncertainty that there will be uncertain events certainly coming to create more uncertainty. Certainly. Okay, Manny. More clarification. I already have about 410 node factories. Damn, Manny, you're a baller. You almost have a master node. I'm thinking about buying more hypercycle licenses and filling them later. Oh. Well, I don't know that I would do that right now. Look, you have here in the next, 28 days or whatever, when they mark their line in the sand, however many hypercycle licenses, but they have to be filled. They have to be married. Just having the licenses is not going to give you the base licenses. If you're doing it to get the freebies, the ANFIs that have all the cool stuff, you need to have them with tokens. They have to have tokens. The reputation's not what matters. The tokens matter for the sake of the freebies. So you're going to get 410 of the base node factories, the ANFIs, the souped up, highfalutin ones. Just having licenses doesn't give you any benefit. And so I don't think that it makes any sense to just buy licenses and not fill them. The price of the Ethereum licenses is not going to change. And licenses with no tokens don't get you the other licenses. So you guys know that, right? Like having licenses without tokens in them doesn't do any good. If you have licenses, you need to have married the tokens to them. This is for the hypercycle ecosystem. That's what it takes to get the new licenses. Get like the gift. Just having the licenses alone doesn't do it. All right. Whew. Okay, so there we go there. Okay, let's switch gears. We got to get to our Brainiac portion. It's funny, I've been watching this damn trade. I probably could have done it for about 8 or 10 cents more a little while ago, but I didn't. But I have until 11 today, or this thing will expire worthless. Well, I sold some stuff yesterday. I won't say what it was, but I'm going to use an example. But as you guys know, behind the wall, we've been really focusing a lot on options trading, specifically cash secured puts and covered calls. To this point, that portfolio is up about 3.5%, a little over 3.5%. And that's since last Wednesday when we started Wednesday. And that's on the total amount of cash, which is not bad because the annualized version, if you annualize that, it's a lot. It's a ridiculous amount because it's compounded, right? So anyway, that's what we're trying to do. We're trying to kind of up everyone's education. So we are going to switch gears. Yeah. And we're going to talk about rolling options to next week. Simplified. I wish I had one of those voices that like took your voice and was like, simplified. But anyway, we're going to do that. And the reason we're not doing this behind the wall, this is very basic and everybody needs to understand how to do this. This isn't really like some cool theory and all this kind of, there's a little game theory to it, but this is not magic. Everybody that is in the options game should understand how to roll options. All right. You got to know how to roll it. And you don't want to fat thumb this. You want to understand net credit, net debit when you do this. So we're going to focus. Yes, we'll focus on that. So yeah. Well, I guess here we go.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
All right. So let's get into it. Let me bring up my handy. I had some pictures, but you know what? We're not going to use the pictures. Nope. We're going to talk our way through this one. If I have to, though, I will bring up the options chains to get through this. But let's just focus on the Brainiac part of this. Okay. Uh-oh. Why did it get big? Stop. Don't get big. Don't get big on me, bro. I don't know why it does that. There we go. All right. We're going to walk through something that is incredibly useful. And for those of you that have started trading options, especially the weeklies, we're going to look at how to roll that position to the next week. A lot of times you're right on the edge of something expiring worthless or not. And in a volatile asset is a high likelihood that something that's really close to expiring worthless, but that's slightly in the money, you don't want to take that risk, or you just want to roll it and grab as much of that next week. So you notice today the markets close at 11 Pacific, 2 p.m. Eastern. 2 p.m. Eastern. So you have kind of a little bit shortened trading. Is today short? That's normal, isn't it? No, slightly short. It's a shortened trading day today. No trading tomorrow, Saturday, Sunday. Meaning you basically have 3.5 days of time that you can sell right now, and it's going to get wiped. Again, you don't know what the price is going to be by Monday. There could be 17 Black Swan events by then. But assuming there's only a couple Black Swan events, which don't seem to matter, because look at how Jerome Powell S the bed yesterday, and it didn't really even matter, did it? It did not. It did not. So it's funny that the market shrugged off that douchebag. I love it. He's that self-important jerk. Anyway, this isn't super advanced stuff, but most people never get taught how to do it correctly, or they get intimidated by all the jargon. So we're going to break it down step by step. We're going to use real life example from my current account where I sold cash secured puts on a Bitcoin ETF called IBIT. You guys know about this, especially the private clients. Let's see. Our rolling taxable events. That's a question for your municipality and your accountant. But remember, all these platforms, they're going to create a tax document for you at the end of each year. I would assume that profit generated once a position is closed, because there's going to be a net profit generated. You have a sale and you have a purchase, and there will be some net profit. But that is a good question, because technically, if you're rolling it, it's kind of like in your mind, has that contract actually closed? Well, the old one did, but the new one opened. So I'm not sure. I'm not sure when they calculate that tax implication. Anyway, so let me set the stage for everyone. Yesterday, I sold 43 contracts on IBIT on the put side. 43. So I sold to open 43 put contracts, and the strike price was $47.50. They expire today. Okay, I did that because I wanted to grab a few bucks of free cash, and it turned out to be it's right around $1,000. Anyway, each contract, as you know, represents 100 shares. So I've effectively taken on the obligation to buy 4,300 shares of IBIT at $47.50 if the price falls below that level by expiration. And we can look at and why don't we? Okay. Okay, here we are. This is kind of where we're at right now. It's the $47.50. If you look at the underlying price, we're at $48.10. It's not likely. These are going to expire worthless. It's likely that they will expire worthless. So essentially, I'm in this one. I sold it for more than the current price yesterday. It looks like the $47.50 will expire worthless. Now I could wait. I could let that get down to 3 minutes till the end, 5 minutes till the end, when this thing's worth 2 cents or 1 cent or nothing, right? Like 5 or 6 cents. I could deuce out of it, and I could sell it. Basically, I could buy to close because I sold to open, and then I could just go jump in the next contract. The next contract being, if I was looking at the same one for next week, it's a $1.06 to $1. Let me refresh that and make sure that that's time accurate. Okay, so that's 88 cents, and then this one is the 47.50. Okay, so 6 to 8 cents. Okay, so you can see the time is really decayed out of this thing. So I could basically deuce out of this thing right now, probably for 6 or 7 cents. I would look at going into the next one, which is next week, at 88 to 90 cents. I would grab 84 cents, something like that. Net 84, which is not bad. And I could probably get this at 89 cents. So spread that, and I could probably go 7. So is it what, 82 cents, maybe 83, depending on how I play it. It's not terrible. On another 43 contracts plus the profit. Yes, about another 43. Anyway, I'm kind of talking you through the options contract themselves, but let's get back to the juice of it. So, okay. So because I use cash secured puts, I've set aside, it sets aside the cash in my account to make good on the promise if needed, right? So in return, I get paid that premium up front. So yesterday I sold those for 22 cents. Okay, I sold it with just like a half day left. So 22 cents. So it's 22 cents. Let's do some home gaming. 22 cents on 43 contracts. What's the money on that? Let's see if you guys are paying attention. Barry, this is a simple explanation. I'm being simple and then I'm explaining all the bits and pieces to it. If I just tell you do this, do that, blah, 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 you're going to get lost. So by the end of this, it'll be simple. So again, show me the math. Yep. So 43 contracts at 22 cents. Woo woo. Right? So, okay, remember, break that down in your mind. What does the 43 represent? 43 is the number of contracts. What does that mean? That's 4,300 shares. So 4,300 times 0.22. 4,300, what? You can't both be right. John Green, you can't both be right. 4,300 times 0.22. And then there's like probably $20 in exchange in fees, whatever. Anyway, so I took that cash. No, 4,300 is the total. So 4,300 is the total amount of shares, right? 22 cents a piece. That's what I booked. When I sold to open, I immediately booked that. That premium is in my account right then. Okay, now let's carry on. Let's carry on, folks. Okay, so as the time goes on today, it's 43 contracts. 43 contracts, 43 contracts, 43. I might have going back and forth from the 2s and 3s. Yes, I think we'll all agree on 946. Okay, so as the time goes on and the price is above, for IBIT, 47.50, that thing dwindles to dust. It dwindles to dust like it is right now. It's dwindling to dust. Okay, so I could, if I wanted to, instead of waiting for it to expire, which would be the end of the market, which would mean I wouldn't be able to take advantage of 3 days of time decay. Brandon and I went back and forth through this yesterday. So I might decide I want to stay in this. I like this trading range. I like this area. I want to stay with this same contract. So I want to roll it. So I'm going to roll it to next week. Say, well, rolling, what does it mean to roll? Rolling a position means closing your current trade and opening a new one with the same trade. I mean, you have to set the parameters, but it's a little bit different. It's a limit order that you use. Always use a limit order, but you're setting the net debit or net credit. Since we're selling, we're setting a net credit. What is the net credit? Well, we'll get into that. So anyway, when you're rolling a contract, especially in a volatile asset, it makes sense because you might be like, oh man, I think I'm right, but I'm so close this week. I don't want to mess. I don't want to work. I don't want to get put in, but whatever, or I want to get called out. So I'm just going to roll it to next week and let the price come back down or the price go up or wherever you think the market's going. So there's a lot of reasons why you might roll. Most hedge funds and fund managers, they roll these contracts. They don't get out of one and get into another. That kind of mercurial management is not likely happening. They're just rolling. Same thing with treasuries, you're rolling. Anyway, so in this case, I have an open order to roll these 43 put contracts that expire today and sell 43 new ones that expire next Friday. So basically, I would buy to close today. I would sell to open today for next week expiration, all at the same time. And then I look at the difference in the two prices and I'll have a net credit, right? Let's say it cost me 5 cents to get out of this one, the one I'm in now, but this one's going to pay me 85 cents. So my net credit is 80 cents to the account, 80 cents on 43 contracts. Does that make sense? It does. It will. You can absorb this. Anyway, the goal is to keep collecting premium while maintaining a similar market stance if you think the market structure looks the same. I think the market looks kind of the same this week, and probably next week's kind of the same as it did this week. People are kind of like unsure, disquietude, turmoil, brawl, certainty of uncertainty. Anyway, so it's like renewing a short-term insurance policy, right? You keep offering to insure someone against the downside, you get paid for doing it. So that's kind of what we're doing. So let's walk through exactly how we do it. I use E-Trade. So for those of you using different platforms, it should look the same, but it might not. And Cutler, so this is handled as a single trade. This is one single trade. That's how it works. And I could show you. I may be able to show you that the trade is actually open right now. Matter of fact, why don't I do this? Let's do this. Boop, boop, boop. Okay, let me put it. Yes. Okay, can we all see this? Yay! Okay, this is even better. Look at us doing stuff in real time. Aren't we awesome? We are. Okay, so here we go. So you go to open positions, you find the current open position because it's open because it hasn't expired yet, right? You find your put contracts that you want to roll. In this case, these are the IBIT 4750s. They expire today at 11 my time. So I have I have 2 hours to decide what I'm going to do. Anyway, I choose the option to roll. So it's going to say like you have a bunch of different choices. Roll will be one of your choices, right? You can buy to close, you can sell to open something else. But roll is one of your choices. You click on roll. This will automatically build a ticket with 2 legs. One leg is to buy to close the current week's puts. The other leg is to sell to open the next week's puts, either at the same strike price. You can choose a different strike price depending on your strategy, what you think the market might do, like whatever. So step 3, choose the same quantity, right? Because it's going to show you the amount of contracts, the same quantity, 43 contracts in my case. That's my, and if you're looking on the screen, it should say that. Buy to close 43, sell to open 43, same, everybody same. Okay. Cool. So this should be a limit order, not a market order. This is critical. You can get destroyed with a market order. Don't do this with a market order. We never use market orders. We only use limit orders. Okay, next step. You'll see something called a net credit or net debit. If we're a seller, right? Then we're rolling further out in time, then we're probably going to have a net credit situation. Now, if you're underwater and it's all sloppy and you're trying to get back some ground, it might be slightly net debit, but it should be a net. If you're not just completely smoking crack, it should be a net credit to your account. Okay, credit to your account, a net credit situation. That's the difference between what you're paying to close the today contract and what you're receiving for the next week contract. Does that make sense? So again, you're buying to close today, so you got to pay that price. You're selling to open next week. You're going to receive that premium. So if the new premium is higher, you get a credit. If it's lower, you might pay some small debit. And then preview the trade. Yeah, Granny did not do this. No. So preview the trade. So you'll see the total premium, which could look like you are receiving X amount per contract multiplied by 43 contracts, 100 shares each. Okay. In this case, right now, that position is looking, it's between 82 and 85 cents. I tried to get 90 cents out of it. It was very close, but it didn't happen. So I can probably grab 83, 84 cents. So let's say I grab 83 cents out of this, which I think I could get more, but let's say I grab 83. So let's do some math. If my net credit is 83 cents a contract on 43 contracts, What kind of money do I pocket the second this order confirms? What do I get paid for rolling this contract right now, this second? Come on, home gamers. What you got? Tell me what you got. Okay, we've got a 35.69. What else we got? What else we got? Any other numbers? Any other integers that may or may not match this? Let's see some confirmation. 35.69. Oh, Kurt comes in. I'm thinking Sean might be right on this one. Yes, Mary, that is correct. This will be 4,300 times 0.83. Okay. So 1,000. No, man. Well, it certainly wouldn't be an even number, buddy. Nothing's an even number. Come on now. Anyway, okay. So let's talk philosophically. Why would you roll? It's like, why not just close this one and do the other? Okay. You would roll because time decay is your best friend in option selling. Every week, every day that goes by, options lose value as expiration gets closer. When you roll, you're resetting the clock and letting theta, that's the Greek for time decay, right? T for time, theta, time. Got it? There you go. You just learned some Greek. That's the time decay Greek, right? And it works in your favor. So you're also making a kind of a strategic decision. You're saying, look, I don't mind owning IBIT at 47.50. And if you're going to give me another week's premium for a discount, you're going to give me 83-cent discount on that. I will take it, bro. I will take it. So if IBIT stays above 47.50, I just keep collecting money week after week without ever getting assigned. If it dips below, okay, I might get assigned. I might end up owning the shares, but I've collected a lot of premium on the way there, which I'm okay with because I was cash secured from the start. This is all against cash. So now this trade's going to put us, well over 3.5%. I mean, on the average, just this one trade, probably, I have to look, but that's another 1.7. And we're not, remember, and not until next Wednesday are we even on week 2. We've only been at this for a week and some days, a week and 1 day, because remember we started last Wednesday. So anyway, yeah. And I'm okay owning this asset at this price. This is where I'm at. So let's talk about the risk for a second. If IBIT should plummet, I might get, it could be deep in the money and I'll get assigned the shares, which is fine because I'm ready to sell calls against it. Same difference. It's just on the other side of the table. Rolling gives me flexibility because I can roll down to a lower strike or I can roll out to more time. So I can go up and down or I can go diagonally, right? I could change both the strike and expiration. If I think Bitcoin's going to be up, I actually do think Bitcoin's going to be up next week. Just my gut. There's nothing based on that. Just my gut instinct. Because if Jerome Powell couldn't squash it, I don't think anything can. I think it would melt up. I could also roll these upward, meaning I could buy to close my 47.50s and I could sell to open the 48s, right? And grab a little bit of extra premium there. But I like this contract. I like how volatile it is, and I'm going to probably sit in it for one more week. Hence the contract that you're looking at that's active. So, or the offer that's active. So, from a game theory perspective, you're playing this repeated game. Each week, you gather more information about what you think is the market direction, your gut feelings, the volatility, and your positioning. And each week, you get to reassess your stance. So, this is what, smart traders do. They don't make one big bet. They adjust continuously. The reason that the weeklies are good is because you're closer to the price action. You're closer to the activity. So you have a little bit more clue or a little bit more gut instinct as to the pulse of the market, right? You're closer to it. You sell this stuff way out in time. There's too many events that could occur that could push the price in all sorts of directions, in crazy directions. Okay, and so let me see. We don't need that one. Bam. So remember, you're buying to close the current contract. You're selling to open the new contract. In this case, it's the same strike price at a later expiration date. Okay. And that's basically it. So rolling cash secured puts is one of the easiest ways to manage your option positions as if you're a pro, which you are. So you're controlling your risk, you're generating income, you're staying flexible on how you approach the market. And if you remember nothing else, remember, roll with a purpose, not out of panic, right? You're not stuck with your expiration date. You can always extend. So if you don't want to get put, extend it. Or if you want to get put with a little bit better discount, extend it. Or if you've let the time expire on the other one and you've taken all the, you've suckled out all the premium there is, all the theta left, all the time premium left, push it into next week. Does that make sense? Now, can you do these as two separate trades and probably grab one or two more pennies? Probably. And under a lot of, and if it's a lot of tokens or a lot of, well, in this case, it's not tokens, a lot of shares representing tokens, then it might make sense to do this as two separate trades. But rolling is very easy. You set your net credit, your net debit, and off you go. Okay. Let's see. If you get close to a market close and your offer is still open, will you let it expire or will you adjust your limit down? I would probably, if I wanted to get in this thing, you don't want to, okay, if you wait till the market closes today, you lose the rest of today and Friday and Saturday and Sunday, all that time expiration. That's 4 days. That's almost half a contract of time expiration that you will get for free if nothing else changes. So for me, I want to pocket that time. So I would, with 30 minutes to go, I would start making moves. I would cancel this mother trucker and I would do it as independent legs. And I would go, I'm out on this one. I'm in on this one. Just see you later. Bye. Because this thing's it's going to degrade to just dust. Like if you're looking at this contract, like the 47.50, look, it's between 6 and 8 cents. Let me do one more refresh. The 47.50, 6 and 7 cents. So I can deuce right now. I'll probably get filled at 6 cents, even though, again, it's going to expire worthless. But 6 cents, I can deuce out right now. And I can probably, I can get 90 cents. So that's an 84. That'd be 84 cents. That's pretty good, man. That's pretty good. And I don't think that this extra 20 cents is that much of a benefit to get that close to the 48. So I wouldn't do it. So I would just go like for like. And I probably will do that after this, when this show is over here in a second. I probably will just go by hand. I'll deuce out of this one at 6 cents and I'll jump into this one at 90 cents and I'll be at a 84 cent spread and that's great. So I'll make an extra penny on 4,300. It's not terrible. It's not the worst thing, a few bucks, a few ducats, a few extra shekels. Anyway, let's call it a day. So stay in school. Don't do drugs. Don't do anything my poor insolvent drunk, struggling on meth grandmother or Brandon wouldn't do. And if you ever need to come back to this, just come back to this and go through the explanation again and just kind of feast your eyes on rolling options into next week's Simplified. Matter of fact, I'll go back on YouTube and I'll change the title to Rolling Options. Rolling Options Contracts. Matter of fact, Rolling IBIT Options Contracts. Right? That'll be good. And then that way you can find it if you need to find it. Cool? All right. Well, it's time for us to deuce out, folks. We'll see you tomorrow.